Hello and welcome to the Wednesday check-in slash macro Monday video. I do apologize for not having a macro Monday video out on Monday, but we did get Bitcoin make some of the moves that we were talking about last week and the week prior and the week prior to that. But more significantly, after we saw the trend reversal set up with the lower high in the weekly at $98,000. So this is brought to you by David Gokhshtein and the Gokhshtein News Network. Of course, I'm your host, Landy, and today we're going to talk about macro structure on the higher term time frame of the monthly and what is very significant about what is currently occurring on the monthly price action. And that is, a trend break. We have a clear trend break, and it kind of doesn't matter where Bitcoin's monthly closes right now. If it closes below, still a trend break. If it does close above and gets a significant buyback, it's still very cautionary, right? Because this is now a macro uptrend break by price breaking below, in this case here on Coinbase Spot, 74,420.69, which was the prior higher low on the monthly time frame. That actually does technically confirm the macro high. So now it's about what are we looking for, right, from here? And if a macro high is in, are we in a bear market? Well, yeah, I mean, we're definitely in a bear market. Bearish price action on the weekly has led to a breakdown on the monthly, and we've had a significant drawdown. By any technical measure, it would be considered a bear market. Now it's actually confirmed that the macro high is in, or the macro top is in. Now, as this relates to cycles, it's kind of right on time, Q4 to Q1 for this to occur. Now it's about, okay, how deep will price dive and where might price go from here? And I just really wanted to point out that even if this ends up being a swing, right, we get a close back above that 74.4, 74.5 area on the monthly by the end of February, that doesn't invalidate the broken structure by breaking the uptrend here. But there is a few different scenarios that could potentially play out, and we will discuss that. And this is now officially a bear market. So you're going to hear me talk in bearish and bullish terms. Understand that they don't really matter. What matters is finding out where you're going to position, what the potential conditions are to be met for a bottom to be formed, for structure to then re-enter an uptrend, right? Whether it be on the macro time frame or on the weekly, which we're going to concentrate on next. Now, this is significant, though. Price can drop from here further. There's definitely areas of interest we're going to talk about. But it's, pretty extended on the daily and weekly. We're probably closer to a bounce on the daily and even maybe weekly time frame than not in terms of time frame. And realistically, as soon as we get some upward price action, you're going to see, all of social media go wild. Like, called it, and here's the price. I called it. It's the bottom. It's never going below. And don't fall into that trap. Realistically, because from here, when you get a macro structure break like this, most rallies off of the lower lows are sellers rallies. All right. And what we would need to see is very specific bear trend invalidations met. Right now, to invalidate this particular break and turn it into a deviation, what Bitcoin would have to do, and I've talked about this in the past quite a bit, actually. What Bitcoin would have to do, of course, to re-enter an uptrending structure on the monthly and invalidate or have this become a deviation would be to take out the all-time high. Pretty simple, right? It would have to take out the all-time high at 126 and just keep plugging along to the upside. And in this case, getting monthly time frame expansion to the upside. That's really what we'd be looking for, right? It would have to close above 126, 125 area by that upper second, beat the high, and go on a run again. Now, if that were to happen, well, then this was the bear market, right? And by any technical measure, that would be the bear market. What is more likely to happen in a bearish period or bear market is you get a seller's rally. So once you see the lower lows come in, typically you'll see some lower highs. This is just for examples purposes, and then you see lower lows, right? And then, then you look for the bottom to start forming. And the weekly is actually showing us something pretty significant still, right? So we know what the invalidation of this current market structure is for the monthly. We now have a broken structure, even if it does turn out to be a swing. A few things here to note. We are in a macro compression, all right? And we just hit the lower first standard deviation, away from a basis. What is this basis? This is the 20-period moving average on the monthly, which is currently at $89,000, almost $90,000, which just so happens to be the area that was kind of the breaker price point between that 93.5 and 86K that we were talking about. It was in the weak half of that weekly area or zone. And when it failed, right, it rallied to 98 and then, broke structure into a trend break and then got a lower high and then lower lows, of course, right? We'll take a look at that on the daily in a moment. And today's just going to be focused on Bitcoin. Bitcoin is in the driver's seat for the rest of the crypto market. So basically what I'm saying, you can kind of translate to structure and kind of what to look for in other cryptocurrencies by and large, especially the large caps, your Ethereums, your Solana, so on and so forth. And in this case, Bitcoin is in a compression, right? This is a monthly compression phase. Like we had the expansion after reverting back to the mean, right? And then putting in the first higher lower trend reversal setup of the bull market and then immediately taking out the lower highs here, right? This was a confirmed lower high at 31.8. 31.8 was, so many might remember, was the bear breakdown candle from close, right? And swing. What did this swing do? It got below the low here at 28.8. This invalidated the bullish structure. We already had a lower high in place. This is not a technical higher low. It is a higher low swing. It is not a higher low close because we never closed above the open of the January 22 candle here at 46,211. The close here was at 45,528. So it was a swing higher low, but caution, right? It swung into the last higher lows close. What do we have over here? A swing from the November candle into the last month's higher low close. And then it's been down since, right? With a nice little retest on the weekly with that lower high. And in this case, what we got was a swing higher low, the closing higher low, but that swing breached the close of the previous higher low at 35,000. And then we got the lower high, did not confirm the closing higher low. That was actually the criteria at the time of like, hey, if it doesn't close this higher low, it's pretty much over, and it's already mean reverted back to the basis. We haven't quite seen where a low would come in just yet. And this is, as it stands right now, broken structure on the monthly as Bitcoin trades. What did it trade down to? Just below 72 here at 71.7. So again, like, I'd mentioned if it started to skate below some of the areas that we talked about into the mid 70s and starts to lose that, looking somewhere between 68 and 72. We're kind of already hitting that. That is also where the monthly lower first standard deviation is. It's trying to hang on to it, did dip below it. Just below there, we have the 55 EMA and the 50 around that lower second. And the lower second standard deviation on the monthly is currently around $55,000. That is something that is an area where we found support in the previous bear market, but then initiated that expansion and went lower. We also did breach below the 55 EMA and the 50 SMA here. I do want to note that the 100 EMA is populated on the monthly. It's a little bit longer on the index chart. Oh no, this is the index chart. Let me get the index chart up for you. My bad. Let's see. Yeah, so on the index chart here, which you'll note is that that the 100 EMA is actually longer, and that's sitting in the mid 40s, around $46,000. So it's going to be roughly the same here. It's a little bit different because it's measuring less history, so it's about 44.4 here, but it's realistically on index it's about 46. Now, here's the thing that you need to watch for on the weekly here. I have, and I did post a chart here. You can ignore the diamonds. Actually, this is for trend changes and areas above moving averages. So I'm actually going to turn this off now for the EMAs in terms of trending structure. If you ever want me to go through that, just throw a comment and down below the video here, and I will get into it. But here's what I kind of drew up here. All right, what we have here on the right is the EMA set. It's the same EMA set here that you see on the price chart. And then the Bollinger Band set and just kind of the positions on where they are. So it's a little bit easier to visualize over here on the right-hand side because it gets to be a cluster of numbers on the actual price side of things. So in this case, what we have here is an expansion on the weekly. Right. So we were at the highs getting compression. We got the expansion to the downside, set a low, complex low on a close, and then made a lower high at 98, right? Essentially tagging this higher low swing here and then making lower lows. And what have I been talking about is typically when you get that first expansion through the bands and then we get the mean reversion, we come back down to retest around that lower second. Now, that doesn't mean that it's going to test it directly, but we have confluent areas of interest here. The 200 EMA is also right around the previous all-time high, which is also right around the lower second standard deviation here on the Bollinger Band set. So somewhere between, I would even pull in 67, but 68 to 72 on a close, fair game. And that is, kind of what I've been talking about because the topside structure over here with some of the swings, you see that the price is trading right at this swing, and some of the topside structure from the dailies and weeklies are right in here as well from this accumulation phase and this corrective phase where we put in the all-time high prior to the halving and then came down and tested perfectly the ETF high. So in January of 24, we had the ETFs launch. We had a high of 49,000, came down and retested 38.5. In this case, 38.501 even. 38.5 was a major monthly close open, and then ran to the upside and stopped right around, of course, the highs here, where we have the $69,000 high from over here. Paused for a little bit there. Got the close open kind of right on it, and then went on the actual bull run, which has been pretty mild, which means that volatility is reflecting exactly what we're seeing on the higher term time frame, like the monthly, a macro compression. We're also seeing that, of course, on the quarterly. Now, to the downside, from here, I'm looking at 68 to 70 being a viable bounce area if it doesn't bounce right from here right now on some of the topside structure over here. And that would be, it's a 200 EMA, lower second standard deviation, a retest of that. And if we do get, the weekly that passes under that, we could see a swing under there into, 67 or so. That's fair game. If we do start to see that break down, though, we have to entertain, trips back to not just test this high side structure where we have about 68 over here on the close. Then we have to start entertaining moves to 65 and under, right? And then specifically for this structure over here between right around $65,000 here and then 65,550 or 66,550, there's kind of a little bit of an area of interest there. But then it's all about this low right here, which is $58,000. This is right around the weekly 200 SMA and the lower third standard deviation, which will continue down. The next big area to the downside, which I don't really expect this just to nuke through these, although we have seen that in the past, and not necessarily getting the closes all the way through, but we have seen it nuke through, even with the expansive setup that we have right here, right now. I'd be more erring on the side of a bounce from the daily, weekly in and around these areas, 68 to 72 as being a more likely area. But if it does move through and specifically get below the mid 60s over here by these highs on the weekly, then I'd look right to that 58 to 58.8, which is right around the lower third, and the 200 period simple moving average for the weekly time frame, which is looking back those 200 candles for the weekly time frame, which is now at around 58 or just slightly above 58. So fair game. If it does drop that, I'm looking down to between 48 and 55 by the weekly 377, which of course is going to be right back to when I say 48 to 55, it's essentially we drop this and we're headed down somewhere in between and below the 200 period simple moving average and the EMA, the 377 EMA here. Now, why do I bring this up and why is there a red line, red vertical here? Because if we do get continuation, that's what I'd be looking for if it was just continuation from here. Now, even if we do find support, beware of the invalidation of this trend to the downside. Where is the invalidation of this trend to the downside? Let's just say that Bitcoin bounces, right? So we've got this clean downtrend to continuation. Let's say we get a direct retest. Where is the invalidation of this downtrend? It's back above the last lower high at $98,000. That's where things begin to change for the weekly time frame. I will say the bands are still set up in a bearish fashion. We also did not get the same type of swing below the prior weekly low and then close in it even after swinging below it and then close in it and then take out the lower high. So that's off the board now. But where would structure change? Where is invalidation on the weekly for this particular downtrend? Be back above $98,000, right? And like I said, continuation below that 80,000 to 80,500, and we're in that continuation phase to test that lower second, and in and around it. It doesn't necessarily have to hit it directly. 72, fair game. We dipped into it. 71.7, that's good enough if that was the case. But just beware of continuation to test further down on the weekly. Now, why am I pointing out this red line here? Right. So we know the invalidation conditions. We know the continuation conditions. Many people are eyeing the 200 period simple moving average. One, most people are aware of where the EMA is and the SMA, right? The exponential moving average at 68, the 200 period simple at 58, right? Well, if we get below there, we have the 377 and we have this lower high, and it was locked in on the candle of late January, right? Moving into mid to late January, moving into the end of the month. And what we have here, if we scroll back, this should be red, not green. I'm pointing this out because I think it's very important to understand that here on let's see, we're going to go over here. I know it looks like a mess. Give me just a moment. And forgive me for losing my voice here, but okay, we broke into these weeklies. We put in a lower high in the weekly. We come down, we break structure, and then we retested, right? Retested this structure here. We were already in a downtrend with a bear flag. We're in a downtrend with a bear flag. Currently, we got a retest lower high. But one of the things that you'll note here is there's a red vertical line there. And then we came down to the through, and we found support initially on the 200 period EMA, the white line there. Came down to the purple line, which is the SMA. And we ended up, we didn't really have significant bounces. We went into the compression and then just resolved to the downside, compressed again, and then voila, shot, and then it was back up. But what's important about this lower high at 32,380 to 400 is the area of where the RSI was. And one of the common areas that we see now on that lower high, we were at right around a 31 read after that lower high was confirmed. We're currently below a 31, but lower high confirmed. We're now sitting at right around the same levels. And I bring this up not because I think that, it's going to play out exactly the same, but because where this lower high was confirmed and where the current lower high is confirmed from an RSI perspective, and where we are in relation to the EMAs, well, we were right on the 200. So Bitcoin's actually in a stronger position in the bearish control zone of RSI. And this is the first time that Bitcoin has entered the bearish control zone since the bear market, right? So this weekly lower high and heading down, because if you look here, we were right on the edge of the bearish control zone. We had the lower high right here at 98. The candle that confirmed it broke us into the bearish control zone. We did dip into it a little bit. This is the first big close in there, right? First major close with a lower high. And you'll see that over here, after we did that, things continued down for a little bit to an RSI level of around 25, right? And then bounced up to the edge of the bearish control zone, started to build up those divergences as we got those lower lows continued to come in on Bitcoin. But we did get sellers rallies in between. But in relation to where we were on the 200s, we broke below the EMA. Many were looking for the SMA around 20 to 22 at the time. I know I was looking at the time between 15 and 16. Here we got 15 and a half. But we extended back through the bands to the downside, mean reverted, and then went in to find the low. The low came in on the weekly just below the 377 EMA, and just below the 377 here would put us in the mid 40s, right around this closing structure. Keep in mind, this will keep moving up. So it could end up being right around 49 if it were to continue to come down and meet that area or rally into lower highs. That gives more time for the moving average to come up. But I wanted to note where 44,000 was here. That is the closing structure on the weekly. And that is one of the more extreme areas if we were to see a similar move in relation to the moving averages. It's very rare to get below a 377 on a weekly and sit below it without starting to reverse trend. Now, that's where I do get a bit of more of a bias right now as it currently stands, that there is a high potential for this area between 68 and 72, specifically on a weekly close, by the way. If we close back below, even $69 or $68,000 in this case, that would be continued expansion, and it would put it below the 200 period, targeting that 58,000 to 60,000 or somewhere in between before a concerted bounce. But we are getting towards the extremes. The other thing I wanted to note here is kind of where we were in terms of stochastic momentum. We're at about a 16 read, right? So about a 16, almost 17 read. We're currently at a 17 read. So we're in a very similar position. I want you to note how momentum was blunted on those sellers rallies thereafter. And this went on for, quite some time. But it wasn't like overly long after that high was put in. So we had, a little less than a year. So what is what are we looking at in terms of months? So we got 196 days. And we'll just say that was, about 6 months, 6.5 months or so. More towards the 6 month side, right? So about 6 months later, what is it now? It's we're looking at, if this is going to play out in a similar manner with sellers rallies coming through, we're looking at things probably starting to come out the other side on the weekly, provided it doesn't invalidate above $98,000. We're probably looking summer into fall time frame for, a macro low or a major low being set. We'll likely get some major lows on the weekly, but in terms of the monthly, likely a major low set sometime in the next 6 months. It's usually how long it takes once you start hitting these bearish levels of RSI as it relates to the bands, provided again that Bitcoin does not invalidate the structure above $98,000 on a weekly close specifically. That would change things a lot, right? If it does rally and close above, the $98,000, right? If it was to rally and close above 98, that's where things would significantly change. It would put Bitcoin back above most of the major moving averages, specifically getting back above the 50 and 55 and the basis band, the 20. And then I'd need to see compression, right? And then have resolution back to the upside. Because right now, if it was just to come right back up, it would very likely result in a lower high on the monthly, even though it was higher highs on the weekly. And that would be your lower high, lower low, lower high bear market structure, and likely take much longer than 6 months to resolve to find that actual macro low. But so far, I think the price is in a good position. I am still in the camp of, because of the longer term time frame compression, and I even floated this last year quite a bit, as if we do deviate, we could potentially deviate, hit low prices, and then come right back up to the top side to resolve this compression to the upside. That is not out of the question by any stretch of the imagination when you're in a macro compression. So that is something to understand. And that would look like, what would the bulls want to see from here? Whether this, let's say this is the low or this is the low, it doesn't matter. This is just an example. What the bulls would want to see here is, a trend break. If it was going to happen from here, a compression, find support, and then start resolving back to the upside, that would turn the monthly structure break into a deviation. And of course, we'll talk about this more as we get closer to the end of February. But as it stands right now, I wanted to float this out there. We're getting to some extreme levels. Let's go ahead and look at, we're pretty, we're down in the bear market, in the bearish control zone for the weekly. We are in the oversold area, which it can stay in, especially if it's going to be sellers rallies from here. We still have to find the low, right? On the daily, it's still a move in progress. So you got to give it some time. And from the daily perspective, pretty easy. We're pretty deep in the bearish control zone right now with a 22 read. This is where, things could start to change or shift around, but I'd want to see some bullish divergences start to form. And where things would change more significantly on this daily here. Let's go ahead and turn off this, and then I'll wrap this up here. Let's go ahead and get rid of that. And let's get rid of the MAs here. All right. So we are now past the area. We do have some stacked areas, and then we got some no man's lands for kind of closes here. On the daily, where's the last lower high? This is where daily structure is more likely, even on a rally from any of these levels. Last lower high is at 90,476. So basically 90,500. What we would need to see is if it was like, let's say this is the low, it would need to do one of these if it was going to trend break, right? And then try to get a trend reversal or something. Other than that, what we're more likely going to see is, rallies either locally or, something extended, like up to, in the low 80s or even mid 80s. And then, a move back down. And that's where then we can evaluate this low side structure to see if there's higher low, equal low setups available that could take out, especially like more preferable for the bulls here would be like to get a low set, stay local, come down with a higher low, and then try to work itself out that way for mean reversion back up to higher prices. That would be the more acceptable. Get a local lower high that's easier to beat to get that structure change on the daily. But right now, this is a move in progress, and it's still going. It's probably closer to the end of this move than not, right? So we had the swing below 74 in the Tuesday candle. We came down to test the actual low, that big monthly and weekly zone at 74, 420.69 here. But realistically, we dipped below it. That's a structure break on the monthly. We tested this inside zone between 76.5 and 78, and then dropped to the next bigger weekly area, which is the high side structure over here. There are a couple closes to be aware of. We've got the 73.835 high, and then we have the closing structure right here at 71.3 to the next big area at 69,600 or so. And then, of course, we've got 68. And 68 is another lower high from that structure from 2024. And that's where, that's also where the 200 EMA is. That's where the weekly lower second standard deviation is. And of course, it's right around the 2021 highs. And then, of course, it's also right around some of the major areas for the highs that were put in back there in 24. So, this is an area where it could still get continuation down. And then it's all about, does it make it to the mid 60s if it starts to drop it? Otherwise, I would be looking for, a seller's rally to begin from here, probably pretty locally between that 68 and 72. And then it's all about, where does the next high come in? Is it a higher high than 90,500, or is it a lower high? And that will give us a lot more information, right? We see the lower first standard deviation here at 78 to 78.5, right around this weekly zone here. That's an area to pay attention to, all the way back to 80, right? And potentially even up to, there's a monthly level at 82.5 for a monthly close open, right? So that is what to be aware of here. And this is not a time to check out. It's bear market. Let's walk away, because there is a high potential based on, criteria being met, especially anywhere between, like 48 to 55 on the low end, or if it's going to be on the high end in the 58 to 65, just like hitting these zones and then trying to go for some of this structure down here where 58 is. That would be a pretty mild area, especially if it takes a little while to get there. Then that would be a shallow bear that could very easily turn into a deviation, right? And then it's all about, where does the weekly settle? Can it get above 98? Does it put in another lower high? And then we can set the criteria based on either a further lower high. Right now it's about $98,000. That's what we got to pay attention to. And then, of course, the daily. Daily's easy right now, 90,500, but likely going to put in a daily lower high. And then we can gauge it from there for potential daily structural changes. And for those that want to get in on the long side, I know that what I would be doing is hunting a trend reversal setup. Higher low, equal low, they can take out a lower high. So if it was local, This is just an example, by the way. Lower high, and then, higher low, equal low structure that can take out that lower high. And then that's where you'll find me actually looking to get in for any kind of swings. Other than that, it's really low term time frame counter trend scalps, which, I'm not really that interested in. I'm happy in my short side position. On Friday, I will wrap this up with the Friday wrap up and discuss, where we are on Friday, and of course what to look for in the weekly closes. And then from there, we'll take a look at traditional markets. We'll take a look at some of the commodities. Gotta after swinging into one of the major areas, silver did swing 70, did close above, so it's preserving some of its structure. I know gold had a nice drawdown, but it also broke structure in terms of the daily. Those are either going to get massive rebounds to rejections to the upside, or they're going to do some consolidation in terms of forming structure. Gold dropped all the way down, and it dropped the low at 4,500. Nice higher low, but you got to be aware of anything. It can rip all the way back to the highs, but it's continuation is out of the question below 5,600. It's going to result in the lower low, lower high, equal high kind of a scenario. And the same is going to be happening likely for silver. And then we're either looking for a consolidation or we are looking at, continuation to lower levels. And silver's, already rejecting below the basis band here. We'll see what this turns out to be. If this ends up with lower low, lower high structure and then trends back down to 70, but it's strong above 70. Gold got its close well above 4,500 and 4,600. It filled out the gap, went for more. Above 4,400, it's still pretty good. I would say 4,500, see it back below there. Things are not looking so great. And I would also say that anywhere below 51 to 5,200, likely not a bullish setup, more of a consolidation setup, and see if the most recent lows can hold. If not, they're going to probably drop significantly lower. 4K would be a key area to watch to the downside for gold. And then for silver, looking 65 to 60, and then anywhere below there, likely looking, that 50 to 55. But we're a little ways off from that. I'll touch on that on Friday. And I hope that you all had a wonderful weekend, a wonderful week, and a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care, and I'll talk to you Friday.